Hello, Currency Mavericks. It is Tuesday, March 25th. Let's jump into the Currency Recap. In this session, we are going to talk about the news of the day, break everything down, take a look at what's going on, and then we're going to pair up the strongest versus the weakest. And spoiler alert, there's not a lot that's strong, there's not a lot that's weak at the moment.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, so as I said, it was a pretty mellow day. So we're coming off the news of yesterday, which was mixed European PMIs. So the euro's been a little softer, the dollar's been a little stronger over the last couple of days, but really nothing to really look at. We had a big move up in equities on Monday, that huge gain, and we just consolidated. The most common candle you get after a big expanded range candle is the Harami pattern. And that's basically exactly what we got today. However, this one is sitting in a little bit more bullish area. I'm going to be pointing that out when we get to the chart. We did get U.S. consumer confidence. It was an ugly report. It fell worse than was expected, but the market didn't really care because remember, it rallied on the news that the Trump tariffs are likely to be less than feared. So this is looking in the rearview mirror at how people felt a week ago, 2 weeks ago. Now the markets are looking past these news events. So look, that's just where we are in the market. And I got to say that this was a bummer of a day. This was a really low volatility day. I mean, this was it. This is all we got. Up a tenth, down a tenth of a percent. The euro was the weakest. The yen was the strongest. But even that was like, yet a 0.5%. That's not a great trading day. And we take a look across all asset classes. It just wasn't a great trading day. S&P and the world indexes barely higher. Crypto totally flat, which is, again, you're not going to see that much in your life, totally flat. Gold up a little bit, oil flat. These are all really small numbers. Really small numbers. Bitcoin up less than 0.5%. Again, this was just not a great trading day. And let's take a look at where we are in the S&P. We were bearish. Come down here bearish. And I said, look, we can get more bearish when we get a rebound and a fail. Guess what? We didn't get that. And last week I had to say, it's not looking like we're going to get the fail. We did break out above this little resistance point. And as I mentioned earlier, we did get the Harami candle. So this is pretty typical. However, I want to talk about this candle right here, because this is one of my favorite candles. I love the gap and run candles. To me, gap and run candles have always been a great sign that the market's got some real short-term momentum. If we take a look at this chart and we say, okay, where did we get, this gap and run, gap up? Maybe this was a 0.3. I always look for a 0.3 gap higher. This one definitely was one. This one was definitely one. We take a look back all the way here. This is definitely one. I've always used these candles as an indication. A gap up and run and close at the high is always telling me, hey, these things have more gas. So since we're right here on the subject, I've always wanted to know stats. And I've run some stats in the past, and I've had my traders run some stats in the past. But I'm going to give a quick plug for our Vegas summit that's coming up in literally 1 month from today. We're going to be talking about AI, and this is one of the ways we're going to talk about using AI. So I've always known this candle's been a good candle to show, hey, there's some short-term bullishness coming. But let's get into the stats. I downloaded about 2.5 years of data, so all the way back to November 2022, and I dumped that into ChatGPT, and I said, look, I'm going to give you QQQ daily price data. I'm looking for any candle that gapped up more than 0.3 from the previous close that ended within 10% of the high of the day. Let me know how many times this happened. So it crunched all that data and said, okay, it happened 28 times. And I said, great. What was the 3-day return after those candles? And it broke it all down and said, okay, the positive days had an average return of 1.5%. 11 negative days had an average of 1.1%. And then I asked, what's the win percentage on that? 61% roughly. What is the profit factor on those? A profit factor of 2.04. So when you take a look at those numbers, 61% win loss, 2.04 profit factor, that's a nice edge. So when we now know this data, and we're going to be using ChatGPT and other LLMs to help our traders get this data and build some really cool things. Because in the past, I knew they were good, but I didn't know the numbers. Now we can get the numbers. We're really excited about what AI is going to do for our trading. So my call is, hey, the stats say that we're most likely going to go higher over the next 3 days. Now look, you can go into ChatGPT and you can ask it, what about 5 days? What about 10 days? See when that fades. But I just want to know for the next 3 days, because I do think we're going to run into this next area of resistance, which is right around 5,800 on the S&P, 5,800, 5,840, maybe even all the way up to 5,870. I think this is going to be the next test. And we'll see, does it break down there and fall, or are we going to break out and run through it? Or do we hit, have a little pullback, and then a breakout? We'll have to wait and see, but the downtrend is, I don't want to call it broken here, but we're definitely no longer as bearish as we were. The chart has spoken. Let's take a look at the calendar over the next 24 hours. We don't have much. We don't have much at all. Really, Aussie CPI, that's about it. We got pound CPI in the morning and US durable goods tomorrow morning. So there's not a whole lot of news really helping us out. Let's go in and take a look at the currencies and score them. All right, I'm going to run through these all pretty quickly because you're going to see that they're mostly flat. So we take a look at yen. We got yen, moving averages flat, RSI flat, everything flat. Dollar, pretty much the same, flat. Everything flat. Swiss franc, everything flat. So this first rate, not all that interesting. All of a sudden, the euro, okay, we actually have some movement here on the euro. The euro is weakening. So the euro, let's give that a -2. We got the pound. Look at that, flat. CAD, CAD is actually moving. So we've actually found one currency moving higher, one currency moving lower. Take a look at Aussie, roughly flat. Kiwi, falling a bit, but flat-ish. Take a look at the cryptos to see if there's anything going on in there. Take a look at Bitcoin. Bitcoin is rising. Bitcoin's rising. Bitcoin Cash rising a bit. Ethereum a bit. Litecoin even less. So look, they're rising, but everything is within this daily chart. It's not great. Remember, we want to trade cryptos when it's this over here. We don't like to trade cryptos when it's this here. This is just no good. Here's our currency board. And to me, the only thing interesting here is EuroCAD. That's it. Until things change and move, EuroCAD is going to be the only trade setup I'm even looking at. So let's go ahead and take a look at it. All right, EuroCAD, I'm going to take a look at it on a daily chart first. So we've seen the EuroCAD break out of a pretty major range, had a nice run, and we're having a pullback. So look, I don't trade counter trend. The trend of this currency is higher. It's having a pullback. I don't trade counter trend. So this is immediately, it's not a trade for me. It's immediately not a trade. If you don't mind trading against a daily chart, which I highly recommend you stick with, it's a decent trade. As you can see here, it's just falling. It's falling, basing, falling, basing. We just had a fall. I don't see a ton of momentum out here. Theoretically, this is an entry here. I mean, you could see here, we did break below that low. The question is, I mean, look at how it's moving. It's moving to where it is, again, falling. Let's see, what is that? 70 pips, and then basing for 2 days. And then on that breakdown, it goes from 70 more pips, basis for another 2 days. So look, if you want to be in a trade, stuck in a trade for 2 to 3 days to where you can maybe get 40 to 50 pips, and this is a 1.5 price, I mean, we're talking about 0.3%. I just don't see the upside here. It's not a great market environment. It's a low volatility environment. And we have said this over and over again. It's a very famous saying at Maverick. Trade the market in front of you, not the market you want it to be, not the market you think it should be. The market in front of you is not good at the moment. This is where undisciplined and new traders churn and they spin. And what happens is they grind up their accounts. They take little losses in these points. And then when the big move comes, their account has already lost 10%. And then when they have a run, all they're doing is making back what they lost during that churn. Let's be better than that. Let's sit out. And I would love to say there's other markets that look good right now. There's not. There's just not other markets that look good right now. Everything's in this consolidation. We will keep updating you and hopefully things will turn around. Until then, again, trade the market in front of you. Just recognize it's not great. Goodbye, everyone.